Welcome. Today we'll be looking at Bitcoin's halving, the fourth halving to be precise, which is coming up in about 21 days on our favorite holiday, 420. I'm your host, Dead Money. Let's go ahead and jump into it. So, Bitcoin is a monetary protocol. To earn Bitcoin, miners need to solve essentially computational problems that require energy and time. For this, they're rewarded with Bitcoin. Now, over time, the reward for these miners, the problems that they're solving, is decreased to create to make Bitcoin basically a deflationary currency. All right. Um, on April 20th for 20 bro, the reward's going to be cut in half from 6.25 coins to 3 coins. This website is called bitcoinblockhalf.com. Feel free to come check it out. Today, I really don't want to get too much into the fundamentals of this stuff because I think people get caught up in needing to know what the technology is and uh, thinking that if they buy Bitcoin, they need to hold it for the rest of their life. Yada yada yada. You can think that way. Maybe you'll get there, but we're gonna see that these halvings cause these kind of predictable peaks and valleys that we can use to make tendies. We are in the business of making money. You can think Bitcoin is a Ponzi scheme. It basically is, but it is the best Ponzi scheme because it has a fixed supply and it has no central authority, unlike fiat currency, which can be printed and increase the total supply of. Okay. Um, there are about, I think, 93% of Bitcoins in existence. If we scroll down, we'll see here. Yeah, almost 94%. Um, so 19.6 million are already in circulation. 21 million will be the max supply. Now we won't reach that max supply for a long time because it's supposed to slowly issue out. All right, but most of it's in circulation. So it does have it has an inflation rate right now, but that inflation rate is deflating and will eventually be deflationary or really fixed as well. Um, okay, let's talk about tendies because that's what we're here for, right? Again, if I haven't apologized already, I apologize for the mouth breathing, having trouble with the audio, but forget it. Forget it. Just watch and listen as best as you can. All right. Um, so Bitcoin has had 3 halvings already. These dates listed here. These halvings occur every 4 years, and we're going to go ahead and see what happens to the price of Bitcoin before and after these halvings. As you can see here, this is a historical chart of Bitcoin. Bitcoin was created around 2009, yada yada. We're going to kind of ignore everything that happens before the first halving. Okay, so this was before the halving happened. The first halving happened on November 28th, 2012. And we want to measure because we have a halving coming up. We want to be like, what's going to happen to the price? What could happen to the price of Bitcoin? Well, we're going to use a measuring tool to see what happened to the price after the last halving. All right, or sorry, the last 3 halvings. So the first halving increased about 10,000%. Yeah, 10,000% in approximately 1 year. Okay, so you see there was an initial peak, but it kept going, and we reached a discernible peak about 1 year after the halving. All right, for simplicity, we're going to be measuring from the halving date, not necessarily the previous bottom, but I will show you that this also kind of is kind of like a predictable correlation, which is also interesting. But okay, let's get this right along. 10,000% in 1 year, the first halving. Oh my goodness, but dead money. Bitcoin always crashes. So you buy that stuff and you hold it and it's gonna crash. Yeah, it is gonna crash. Let's see what happened the first time. It crashed approximately. If we go to the bottom here, the bottom price, it crashed 86%, and this occurred in um, almost a year and a half. Okay, wow, what a crash, but also what a rally, right? Um, we're gonna see this pattern, guys. We're gonna see this crazy exponential gain, and then a large crash. But if you're aware of it, maybe you can get out before the crash. Let's keep going. Second halving uh, occurred July 9th. Let's go ahead. Like I said, we're not gonna measure the bottoms from the tops because I want to kind of focus on the halving dates. So let's look. Oh, sorry. Before we move on, let's do look at how long did this take from the halving to reach a bottom. So from the halving date, it took about 993 days, which is about 3 years. 3 years. Let's put that in the back of our pocket, and we'll come back to that. So peak after a year. After that peak, crashed, which is took about 2 years after the peak, and from the halving to the bottom, about 3 years. Keep it moving. Second halving. Apologize for the mouth breathing. We have a percent gain from the halving to the peak for this cycle, discernible peak. Of course, this is hindsight, guys. Um, we're using technical analysis right now to kind of see what the price behavior of Bitcoin has done, right? Um, don't overthink about what you're seeing on these charts. These charts are where buyers bought and sellers sold. Okay, for the price to go up, there needs to be more buyers and sellers. For the price to decrease, there needs to be more sellers and buyers. All right, so technical analysis, sometimes it's like misconstrued as like, I don't know, future telling or something like that. It's not that. You're literally seeing where people bought and where people sold. And perhaps you can use that to your advantage in the future, maybe or maybe not. We're not really getting into any technical like patterns, like head and shoulders or harmonic patterns or anything like that, um, which can be beneficial. But with any pattern, any even setup, it's not a guarantee that it'll work out. But really, right now we're looking at price behavior of Bitcoin correlating to the halvings. All right, second halving. Wow, 3,000%. 3,000% in about, I believe this one was a year and a half. And at the end, we'll calculate these years. A year and a half. All right. Crazy, crazy gains. But dead money. Doesn't it crash? Doesn't Bitcoin crash? Yeah, it did crash. Uh, Now did it crash to the previous price before the first halving? No, it didn't. It crashed from this peak to the discernible low, 84%. 84% for the second halving. Now, let's compare these two. One thing you'll notice is the bottom came a little bit faster, a little bit faster. Um, I know the second cycle, Bitcoin started becoming more prominent, more mainstream, I guess. Um, and let's go ahead and plot what was the time from the halving to that bottom. It took about 900 days. Again, 900 days, a little bit less than the first cycle, but nonetheless, very similar. 900 days. Okay, so 10,000% gain, 86% loss. 3,000% gain, 84% loss. Let's keep it going. Now, the next cycle, I'm saying cycle and halving kind of interchangeably, y'all, because we're noticing that the halving drives the cycle, all right, and vice versa. All right, so for the third halving, this was around the pandemic times. There was a big sell-off going into it. If you bought this dip, would have been amazing for you. Very hard to buy though when price is falling. Um, but if you can observe the behavior of Bitcoin, maybe you can feel more confident on your timing of your buys. All right, let's get into it. So again, we're going to go from the halving date. This is a daily chart. I'm not really even looking at like daily open, daily close. I'm just kind of like clicking clicking in the middle of these candles because it's a large time frame, but numbers might be slightly off, slightly different. I also welcome you to do this on your own because it's really not until you observe this on your own that you're going to feel like you get an understanding of it. Uh, if you see someone else doing it, you're just going to be like, oh, well, it doesn't matter, bro. But you should do it. You make a TradingView account. It's free. Do it. All right, third cycle, we get a peak of. Here, this one was a little bit weird because we had two peaks side by side. There was some news-driven catalyst that kind of caused a sell-off. Um, and so one thing is every cycle, right? More and more people notice the pattern. So kind of see these diminishing returns because on the third cycle we get only a gain of 700% versus 3,000% and 10,000%, right? So sellers are kind of front running the peak um, to ensure that they can sell at a high price. And also, as this is happening, Bitcoin's market cap is getting larger and larger, which is going to make it harder to keep gaining market cap, which we'll talk about in another video. 700% gain, this time in kind of a year and a half again. Um, oh my god, but dead money. I remember it crashed. It crashed so hard. Yeah, that's what happens. We're looking at it right now. It happens every time. So on this correction, we had a 78% decrease. This one took about a year from the peak to the bottom. Um, and from the halving date, this bottom occurred roughly 900 days. Wow, not 900 days? I feel like that we talked about that earlier. Interesting. Very interesting. Um, all right, so let's go ahead and summarize our thoughts here. We've seen that Bitcoin has increased in price every time there's been a halving. It has also decreased in price at the peak after each halving, about 85%, give or take. These peaks occur about a year or a year and a half after the halvings, and these bottoms occur around 3 years after each halving. All right, it's kind of eerily strange how this has been correlating. For this upcoming halving, we do have some anomalies. The first anomaly is that we are already above the all-time high, the previous all-time high, which has never happened before. So that's interesting. This cycle, we have the spot ETF narrative, which may have kind of accelerated the bull run before the halving. And we have a summary of our findings here. Now, why does this matter? How can we use this to our advantage? We can kind of guesstimate when would the next peak be. Okay, we might not be able to guesstimate how much gains it will receive because as you can see, we're seeing diminishing returns. Let me blow this up in case you can't see it. We're seeing diminishing returns. We're seeing 10,000, 3,700. You know, these are diminishing. The next percent gain will probably be less than 700% gain. And to get 700% gain here, it would have to be really crazy. It would turn Bitcoin into like a 6 trillion dollar asset, which would overtake Microsoft, Apple, Amazon, which some of these market caps it might overtake, but we do have a target. Like gold is a $15 trillion market cap asset, the largest asset in the world. Now, will Bitcoin catch up to gold this cycle? Probably not, but we could maybe estimate at least the date that this would happen. We usually see a peak around a year after the halving to a year and a half. This would put a peak um, a peak around April of next year or October next year. Now, we do have some things going for us before we get there. Um, we're just finished Q1, going into Q2, and we still have a long ways to go until winter. Now, why is winter important? Well, we can see from previous cycles that there has been some crazy price action going into the holidays. For the third cycle, there was a peak, really big price increase going into January, and then finally peaked a year later in November. For the second cycle, we had a peak in December, so winter again, or at least profit taking levels in winter. And then for the first cycle, we had profit taking levels in December again. So, um, if you're holding Bitcoin right now, uh, of course, none of this is financial advice, and past performance is not indicative of future results. We don't know what's going to happen. We could crash 30% from here and have to regain all the gains that we made so far this year for 2024. Um, but, you know, it feels like we're early, at least to me. It feels like we're early. And I know buying at these prices is kind of hard to do because you're buying at all time highs. Um, you're literally buying at the highest price of Bitcoin ever. Uh, but what you have going for you is the halving hasn't happened yet. So me personally, I'm still buying like very little amounts every day until we cross the halving, and then I'll probably stop buying unless we get like a huge dip. Um, and That's kind of what I wanted to make this video on. So, oh yeah, sorry, we didn't talk about percent gain. So we talked about timing, but gain wise, I mean, we're not going to see 700% gains, but I think it would be pretty modest for us to get 100% gain from here. That would put Bitcoin around 140K. In my next video, I'll go over Fibonacci retrace and Bitcoin's market cap, and we can kind of play around with those numbers. Um, but yeah, I don't think 100% gain from here. I know it might sound crazy to non-traders, but I mean, bull markets are just insane. I mean, Nvidia this year has just been on a tear. Super microcomputer. Um, the QQQs are up 30% this year. There's a lot of money that wants to find a home because there's been 5 trillion uh, cash sitting on the sidelines earning a 5% yield, and if they start cutting rates, which they are forecasting they will this by the end of this year, I mean that might cause a bull run. Now, if we have like a really bad recession, this could definitely throw a wrench in our plans. But luckily, like we just said, we have a year to a year and a half um, until really, I think it starts to get dangerous holding up here. Okay, now, even if we got to like 150, let's say 200K in like next summer, an 85% drop or like an 80% drop would put Bitcoin back to around 40K. So you do want to sell the top, at least most of your bag. Um, Unless you really believe in the technology and, you know, maybe you have good reason to because this asset has gone up and to the right its entire existence. Um, but I'm not really here to preach about the fundamentals today. I just wanted to talk about the technicals and um, kind of give my thoughts on why I am bullish, at least going into this winter and Q1, Q2 of next year. Um, Let me know if you have any questions. I'd really appreciate if you liked and subscribed. Uh, Comment down below whether you agree, disagree, have anything else, any other findings you want to talk about. On my next video, we're going to go over the RSI and Fibonacci and the market cap of Bitcoin. And let me know too if you have any other uh, Ponzi scheme coins that you like other than Bitcoin. But, if you're watching and reading the comments, definitely don't be careful of scammers and people shilling their bags, because the space is ruthless. Your funds are not secure, not your keys, not your coins, and most of the assets in this space do not actually do anything for society or make any money, unlike stocks, unlike the blue chip stocks in the stock market. So, this is a crazy space, but get in, buy low, get out, sell high, make your tendies, rinse and repeat, so that you can stack your tendies and update your gaming PCs. So, thank you guys for watching Dead Money's first video. Uh, I appreciate you guys very much. I hope you guys have an awesome 420. 420, bro. Having coming up. And be safe, be smart, take care. Thank you guys. Peace out.